Welcome back. I'm Margo Steinlage with Steinlage Insurance Agency, where we handle all things Medicare. Are you currently working and turning 65 and wondering whether you need to take Medicare? Well, this video is for you. In this video, we will look at three things: whether or not you need to take Medicare, how the size of your employer determines that decision, and three caveats to watch out for when you do decide to take Medicare. If you are currently working and you're 65 and you are on either group coverage or your spouse's group coverage, then the size of the employer is what determines whether or not you need to take Medicare. If the employer has 20 or more employees, then you have an option to either delay Medicare or take Medicare when you first become eligible. In most circumstances, I do recommend taking Part A, the premium-free portion of Medicare, because it does help pay bills in the background when or if there's medical bills left over from your group coverage. If your group coverage with the employer has 20 or fewer employees, then you are required to take Medicare as primary. This means you are required to enroll in Part A and Part B of Medicare when you become first eligible at 65. If you don't, you are subject to penalties and gaps in coverage, so I always recommend clients to give us a call to just touch base and walk through this whole process. Three caveats to watch out for when you decide to make a move into Medicare. The first being, if you're enrolled in an HSA, health savings account, high deductible plan with 20 or more employees, you should not take either part of Medicare. So do not enroll in Part A nor Part B. The IRS prevents contributing towards your HSA when you do enroll in Part A or Part B of Medicare. So we typically recommend stopping the contribution 6 months out from your Part A or Part B effective date. Now remember, Part A is always retroactively applied by the government 6 months prior to your enrollment date. So if you enroll in June, your Part A effective date will go into effect as of January. Also, remember, you can use your HSA funds for quite a few things after you stop contributing. You can use it for Part A, Part B, Part D premiums, your co-insurance, your deductibles, but you cannot use these HSA funds for Medicare Supplement or Medigap premiums. A second caveat to watch out for is when you are retired and turning 65 and you have COBRA coverage. COBRA coverage is not deemed credible employer coverage by Medicare, so in this situation, you are required to take Part A and Part B of Medicare to avoid any penalty or gap in coverage. A third caveat to watch out for is when you do decide to come off of group coverage and go into Medicare as primary, there can be a coordination of care issue where your bills are left unpaid. In this situation, we help our clients walk through the entire billing process and resolve any unpaid bills. To recap this video, we looked at three moving parts. We looked at whether or not you should enroll in Medicare, how the size of your employer determines that decision, and three caveats to watch out for when making a decision. If you'd like further information, check out the link in the description below or give us a call. Thanks for watching.